very vocal lately about a banking crisis. Now, David, we know you as the silver guru. You don't really, talk outside of, silver a lot, but when you do, we have to pay attention here. I certainly did when you said that we are going to see another banking crisis, but this time it involves bail-ins. Tell us about it.
Yeah, well, basically I do look at the big picture. I consider myself to have a macroeconomic view, and then silver is just a subset. But regardless, the bail-ins really bother me because after the last bailout, there's legislation passed in the Senate and House that it's illegal to do bailouts, which means bail-ins. And that's kind of gnawed at me for some time, Daniela. So I started looking at the very basics, the fundamentals. And one of the main fundamentals is what is money. And of course, there's theories about money. It's commodity money, which most of your viewers are most familiar with, gold and silver, ancient times, voted by the people. And then there's like legal money, which is money's anything that we say it is, or money's anything that the government edicts or fiats. That's money. And then there's others. But the one that really hasn't gotten much recognition is the ownership theory of money. And the ownership theory of money resonates with almost everybody that's seen you at Stansberry, which means if you can't touch it, you don't own it. Very common sense, very logical. But we've never really applied that to the fiat system. So I started thinking about it more and more. I really kind of had, I wouldn't say an epiphany, but something that really provoked me to ask Ray if we could explore this. And of course, it obviously resonated with you somewhat, because the idea that you have money in the bank, everyone takes for granted, but they don't read the fine print to realize they're an unsecured creditor. I'm talking about the United States now. An unsecured creditor to the bank, and it's really the bank's money, believe it or not. And what that means in a banking crisis, and let's say that there is a bail-in, then they have the right legally to take what you consider to be your money. So there's two thoughts on this. Number one is the ownership theory of money is you take out physical currency from your bank account, and you could do it in any way that's best for you. In other words, you don't have to withdraw your entire bank account in cash, but I'd certainly consider owning some cash for a lot of various reasons. Electronic failure, cyber attack, bank closure, terrorist act, who knows? I look more toward electrical problems with the grid, perhaps, or cyber attack is the main two that concern me. And the other part is that I didn't really say to Greg, and that's, if you have a large sum in the bank and you're really just getting acquainted with the precious metals, one of the easiest ways to move money, quote unquote money, is to move it via a check or a wire and take X amount from your account, move it into physical metal. And that's what a lot of savvy people have done over the years that have listened to you on Stansberry. It's like, look, I need some protection. I need some what we call monetary insurance, some wealth protection. And I've got a lot of cash, but I don't have any metals. So that's one way to do it. The other part, again, I'll give it back to you, Daniela, is
very vocal lately about
what if the world is going to have another banking crisis? The banks would then take depositors' money via a bail-in. A bail-in is a relief or rescue strategy offered to a financial institution that is on the verge of collapse. This relief entails the creditors, depositors, or bondholders of the company or financial institution bear part of the company's burden. It will be bail-ins next time, which means you become an unsecured creditor of the bank. This means that if you don't hold it, you may not own it. If we were to have a bail-in, they may not take all of your currency, but they will probably take part of it. Meaning all of the money in the banks will still be yours, but you will be limited to what you could take out. This is one of the reasons why you have to put your money into such investments like gold and silver, which is metals, because you can actually have that on hand to have as security for your financial security. If you like this video, please like, subscribe, and thank you.